Today's video, we are going to give you a full tutorial on BloFin. We're going to show you how to deposit, how to trade, how to use leverage to your advantage, but stay safe while trading. We use BloFin. It is one of the best platforms in the crypto space. It's slick, the branding's cool, and it's really easy to use. But on top of that, there is no KYC. So you don't have to give them your ID, your passport, or your driver's license to be able to deposit and withdraw. On top of that, we have a link in the description, so use that to sign up. You get loads of bonuses depending on how much you deposit, and it gives you access to our copy trading. Now, another advantage of BloFin, because it is no KYC, you can set up as many accounts as you want. So if you want different ones for different things, maybe one account for copy trading, one account for leverage trading, you can set up different accounts. And you'll get the same bonuses every single time. You just need to use a different email address. Alright, so now you've signed up and now you want to deposit some funds in order to place some trades. So the first thing you'll do is come over to assets and hit deposit. So once we're in the screen, we can deposit whatever crypto the platform supports. Now, all futures trading is going to take place in USDT, that's US Tether. So for me, it's easiest to just deposit Tether on the platform and then it saves exchanging it. So you just select USDT and then the network. And as you can see, it supports loads of different networks. If you're sending from Swissborg, they operate on the Solana network. I'm going to be sending USDT from Swissborg to BloFin. So I'm going to select the Solana network and then it's going to give me an address. Now for me at this point, I would normally use my phone to scan the QR code just so there's no mistakes copying the address. But we're all set up, so we have selected USDT, that's the currency we're going to be sending from Swissborg. It's on the Solana network and now we've got our address. So we could go to the Swissborg app and send us some funds. The other beauty of sending on Solana is it's really quick. So now we can come over to assets, we go to overview and the funds have arrived. But they're in our funding account. We're going to be placing leverage trades, so we need them in our futures account. But it's super easy to transfer. So you just hit transfer, top right hand corner. You want to move it from funding to USDT M. Select all, confirm, and it will move it over to your futures account. Okay, now it's in our futures account, we can go over to the futures menu, and this is where we're going to dive in to some of the details that you need to be an effective trader. So when we come over here, you can see it's very similar to TradingView. You've got the chart, you've got all the different tools down the left hand side. This is the Bitcoin chart, but you can trade any one of probably about 200, 300 coins. But for today's video, we are going to trade Ethereum. Just Ethereum's at a nice point. It's below $4,300. On the 3-day time frame, you can see it's coiling up for its next big move. So we're going to trade that today. Okay, so let's have a look at some of the menus. So up here we have cross or isolated margin. Now, isolated margin basically is per trade. So every time you open a trade, you have to manage the margin effectively yourself. With cross, it just means that it uses your whole available futures balance to trade with. So for us, we've got over $500 in this account. When we open 2 or 3 trades, they all use the same $500 for margin. Now, some probably say that's a little bit more risky because one trade goes against you and it'll wipe out your entire futures account. But for me, it just means I don't have to manage each trade individually. It means that I don't have to constantly check on the margin levels, and we're going to take some low leverage trades, so I don't really think I'm at risk of liquidation anyway. But it's important to note that if you are trading with cross leverage, it does mean that your entire balance in your futures account is at risk. This becomes more important if you're opening several trades or if you're transferring out of your available balance. So if you've got 10 grand in your account, you've got 10 trades open, that might be fine. But if you take 5 grand out of that account, that's going to impact your margin. That's maybe going to make you more likely to get liquidated. So you need to be careful with your margin levels. Okay, next up, we have the leverage setting. So for Ethereum, it goes all the way up to 150x leverage. That basically means whatever you put in the trade, say you put $100, it's going to be multiplied by 150 times. That sounds great, but with leverage comes massive risk. All it would take is the trade to move small percentage against you and you could lose your entire account. I would always recommend 10x leverage maximum, but more likely 2, 3 or 5x leverage is appropriate for most people. It means you've got a bit of extra skin in the game because obviously you're leveraging up your trade, but your liquidation price is still pretty safe. So for this trade, we're going to use 5x leverage. Okay, next up we have limit and market. Limit order means that the trade will only execute at a certain price. So you could set a limit order of $4,000. And if Ethereum goes down as low as $4,000, it will enter the trade, but it won't enter before then. Alternatively, we have market. Market basically means it's going to buy into the trade right now at whatever price Ethereum is showing. This is what I would do for most trades because I probably won't enter trades unless I'm happy with where we are right now. Sometimes it makes sense to set limit orders really low down. So for example, you could have an order for Bitcoin right now at $92,000. We're currently trading above 110,000. If we did get a flash crash, you would instantly enter the market, an amazing buy opportunity. But for me, I'm happy with market. There is an option for trigger, and that just means you can have certain price levels pinpointed for the trade to execute, similar to limit. But we're going to use market for this trade. Next up, we have the box of how much we want to spend. So we can enter whatever we want here, and we can edit it before the trade goes live. The thing I like to do is just type in an amount, type in my take profit level and my stop loss level, and then I can review if it's too much or too little. Now remember, we've got 5x leverage here, so whatever we put in this box divided by 5 is actually how much you're going to spend on the trade. So if we put $100 in here, you can see it's only costing us just under $20 to take the trade. So for me, I think we're going to do 500. That's a $100 trade. As you can see, that would give us 0 liquidation price, which is obviously very safe. And then we can type in our take profit, which I'm going to put at $5,000, and stop loss I'll put at $3,990, so just below that $4,000 level. As you can see, it's not a massive trade, it's only $100. If it goes to $5,000, we make $81.47. If it goes to our stop loss, we lose $35. Now, because we don't have a liquidation price, I'm actually going to increase this. I'm going to put it up to $1,000. That means it's now a $200 trade. As you can see, we now make $162 if the trade is profitable. We lose $71 if it goes to our stop loss. And if it drops as low as $2,000, we lose the entire balance of our account. We get liquidated. Now, there's going to be a lot of people watching this video, and they're probably going to say, that's a lot of effort just for $160 profit. However, this is just an example. We're only using $500, so that's almost a 35% profit margin on our account. So actually, as a percent, $165 or $160 from a $500 account is actually pretty good returns. If you scale that up, you can easily see how the returns grow, and the risk is very minimal. It would have to drop by more than 50% for us to get liquidated. That's a pretty safe trade in my book, and we could probably increase it and increase our risk a little bit. But for this example, we're just going to stick with this. Okay, so now we place the long. So as you can see, buy long and sell short are next to each other. When you buy long, you're betting the price is going to go up. If you sell short, you're betting the price is going to go down. So we select buy long. It gives you one last dialog box where you can confirm everything is accurate. I would make sure you spend a bit of time doing this. I've saw people buy in with crazy amounts. They maybe put an extra 0. It just can get messy if you're not very careful. So we're happy with that. We're going to select confirm, and the trade immediately opens below. Okay, so now we've got our trade open. You can see Ethereum, 5x leverage, just under $1,000. Average price, so this is our entry price. So this is what we bought Ethereum at, which is 4297. We spent $200 on the trade, and we've got our P&L percentage. We've also got our liquidation price, and we also down here have our overall equity and P&L. Now, one thing we should mention is right now our liquidation price is $2,089. However, this may change. Every 8 hours when you're trading, you pay tiny percentage of fees. However, that comes off your overall balance. So as your balance drops, this liquidation price is likely to change. Similarly, if you add another trade, this liquidation is going to change. Even if the trade is XRP or Bitcoin, the liquidation price is going to change because we're using the overall $500 in our account. So the more it's used, the higher the liquidation price goes. Now, across this bar, we have close all. So if we want to just exit the trade, we can close right now at the market price. We also have TPSL, which is our take profit and stop loss, which we set earlier. If you enter here, you can see that they're all the exact same as what we had set before we started, but we can modify them at any point. Now, if this trade moves into profit, you might want to trim 25% from the trade. And it's super easy to do it. BloFin makes everything easy to trade. All you would do is select here, select market, and then an amount. And you could just slide the slider to 25%, and you would trim 25% of the position there and then at that market price. So if this goes up, you're up $50 in profit, you can trim 25 or 50% of the position and take that profit. And that just gets added to your available balance, and then your liquidation price would go lower. One of the last features to cover in this tutorial is the trailing stop loss. It's a great feature. Most centralized exchanges don't have it, but BloFin does. Now, the trailing stop loss allows you to set your stop loss a percentage behind the current price. This becomes very profitable when price starts to run fast. For example, if Ethereum spiked to $4,500 right now, we probably don't want our stop loss to still be in the red, to still be at $3,990. We maybe want it to sit at $4,300. And as the price creeps up, the stop loss follows it, but always stays a percentage behind. You hit the trailing stop loss button, and then you select your percentage, and then it'll guide you through it. Obviously, we're in a loss right now. We've just entered the trade. We're not going to use this feature for this trade, but it does come in useful as price starts to move higher, and you maybe want to make sure that even if the market goes against you, you still capture some profit in the trade. Overall, BloFin is super easy to use. It's designed for traders, it's designed for futures traders, and it's perfect for crypto trading. Hopefully this guide helped you understand how to deposit and how to trade, or at least place your first few trades. Use the link in our description in order to sign up and get those bonuses we spoke about at the beginning, and also it opens you up to our copy trading link. Trading can be very profitable, especially using low leverage and planning your trades correctly. Thanks very much for watching this video. We'll be back with more guides very soon.